September 2025. The silver market is not just moving, it's ripping through price levels we haven't seen in more than a decade. And that movement is rewriting how traders, industrial buyers, and policy watchers are talking about the metal. In this update, I'll walk you through exactly what happened, why it happened, what top analysts and market voices are saying right now, and the realistic scenarios that could shape the next moves for silver in the coming days and months. Let's start with the simple headline. Silver is trading well above the mid-$40 per ounce, a level we haven't seen since the early 2010s, and the move this year has been dramatic. Across the first 9 months of 2025, silver has put on more than 50% of gains year to date, and the momentum has been persistent, not a single-day spike. This is being noticed everywhere: markets, miners, ETF desks, and industrial buyers. So what pushed silver so high? There are 3 core drivers working together right now. Stronger industrial demand. Silver is not only a precious metal, it is an industrial metal. Photovoltaic cells for solar panels, electronics, electric vehicles, and even certain AI and defense applications use silver in quantities that matter. In 2024-25, growth in renewable energy targets and electronics manufacturing has increased steady, predictable offtake for silver, and that steady industrial pull is supporting higher prices. Tighter supply versus demand, real deficits. Multiple market reports now point to supply constraints. Mining production is not pacing with consumption, and recycling flows can't fill the gap. When supply is structurally tight and demand keeps rising, price moves can be larger than in more liquid markets. That's exactly what we're seeing in 2025. Macro and investor flows, safe haven and positioning. In parallel to the industrial story, there's been significant investor interest: ETFs, physical accumulation, and speculative positioning. Lower for longer expectations around policy moves and the market's reaction to recent inflation prints and rate cut talk have re-energized interest in precious metals broadly, and silver, because it's cheaper per ounce than gold and historically more volatile, amplified that interest. Recent central bank and macro headlines have tilted a portion of market flows towards hard assets. Now let's unpack the short-term timeline, which has happened in the past few sessions, and why traders reacted the way they did. Late September move. Over the past week, silver repeatedly tested and then broke through resistance in the low to mid-$40. And by Sep 25-26, it was trading above $45 per ounce, breaching multi-week and multi-month technical levels. The break was backed by both spot buying and heavier ETF inflows, which confirmed that the rise wasn't only a small speculative trade, it had broad participation. Market context. At the same time, equities and macro data created a backdrop of either risk-off or rotation depending on the hour, a dynamic that often benefits precious metals. When risk sentiment wobbles, or when investors perceive central banks might ease later than previously expected, it changes how money is allocated across asset classes, and that has bolstered silver in recent days. What are experts and analysts saying right now? Here are the prevailing views you'll hear echoed across trading desks and commodity research notes. Bullish technical and structural view. Several market commentators argue that this is not merely a short squeeze, it is a structural breakout. They point to a long base, multiple 4-year highs, repeated breakouts, and a market where supply-demand fundamentals are shifting. In that frame, silver is entering a new regime where old resistance becomes the foundation for higher price discovery. Cautious, scenario-driven view. Other analysts urge caution. Their point: silver is more volatile than gold. If the macro backdrop strengthens and the dollar rebounds, or real rates rise unexpectedly, momentum could reverse quickly. These voices emphasize watching central bank signals, short-term positioning metrics, and industrial demand confirmations, for example, orders or procurement notices from large solar panel manufacturers. Let's be concrete. What are the near-term scenarios to watch for? Not advice, but the realistic moves that would materially change silver's path. Scenario A: momentum continues, extension. If silver stays above the recent breakout zone and ETF and physical demand remains strong, the market can keep climbing towards the next multi-decade resistance levels. Industrial demand confirmations, like stronger solar panel orders or increased industrial procurement, would be the kind of evidence bulls point to. Scenario B: consolidation and digestion. After a big move, markets often pause. Silver could enter a consolidation phase where price oscillates around the new levels as profit-taking and new buyers reach balance.
In that case, expect higher intraday volatility, but a sideways to slightly bullish range while the market waits for clearer macro or industrial signals. Scenario C, quick retracement. If global risk appetite rebounds strongly, the dollar pushes higher, or a policy surprise alters rate expectations, silver, being volatile, could retrace some gains. This would likely be fast and sharp because part of the rally is driven by positioning. Quick de-risking washes through the market. Which indicators should you or the viewer watch to know which scenario is more likely? Again, this is reporting on what traders look at, not advice. ETF flows and public holdings. Large inflows have been a major part of the rally. A slowdown or reversal in inflows would meaningfully affect market dynamics. Industrial demand signals. Procurement comments from big solar panel manufacturers or electronics companies, official manufacturing data from major consumers like China and the US, and trade numbers showing increased silver imports for industrial use. Macro data and central bank language. Inflation prints, Fed comments, and any signal on the timing of rate cuts or hikes. When policy expectations shift, so does allocation into non-yielding assets like silver. Supply news. Mining disruptions, labor actions, or material shortages that could reduce output further. Reports of reduced mine output or logistics bottlenecks can be a direct price mover. Now, a few important market realities to frame expectations for anyone watching this rally. Volatility is part of silver's DNA. Moves of 5%, 10%, or larger within a week are not unknown for silver, especially in a volatile macro environment. That makes both upside runs and sharp pullbacks possible. Industrial demand makes silver unique. Unlike gold, silver sits at the intersection of monetary and industrial demand. That dual role means fundamental changes in technology adoption, like faster solar rollouts, can shift the market permanently, not just temporarily. ETF and speculative positioning can amplify moves. When many investors crowd into an ETF or paper contract, moves become larger than what physical demand alone would generate. That amplification works both ways. What about miners and the mining sector? Miners and silver equities often lag or amplify price signals. Right now, miners are benefiting from higher metal prices, and analyst coverage on some producers is getting more bullish as earnings and project economics improve. Yet mining takes time. Exploration, permitting, and capex mean supply doesn't instantly respond to higher prices. That's one reason structural deficits can persist and support price in the medium term. Let's step back and look at the bigger macro interplay. We've walked through supply, demand, ETFs, and policy, but silver's rally is also connected to broader market psychology, an era of heightened geopolitical uncertainty, trade tensions, and a persistent debate over monetary policy direction. Those big-picture worries often push capital towards hard assets. When that happens alongside real industrial demand, the effects compound. Finally, what does the average viewer or follower of markets need to know from today's update? The move in silver is real, backed by both industrial demand and investor flows. The price levels now being traded matter historically and economically. This rally is not guaranteed to be straight up. Silver is volatile and will react to macro policy, ETF flows, and any changes in industrial demand or supply news. Watch the indicators: ETF holdings, industrial procurement reports, Fed language, and mining and supply headlines. Those are the levers that will most likely change the story in the next days and weeks. Right now, silver is writing a new chapter. The metal's industrial heartbeat is stronger than it's been in years. Supply is tighter, and investor interest has turned the whispers into a roar. That combination is what has driven silver into the mid-$40, and why many market watchers are asking whether this is the start of a longer secular shift or simply the next intense chapter in silver's history of big moves. We'll keep watching the flows, the factories, the mines, and the central bankers, because in a market this dynamic, every data point, every shipment, and every policy remark can change the script. Disclaimer: this video is for informational purposes only and does not constitute financial, investment, tax, or trading advice. It reports and explains market developments and expert commentary. It does not recommend buying, selling, or holding any asset.